S&P 500 breaks two critical levels. Nasdaq breaks major support and another key level. Semiconductor sitting at a new low and teetering on a major support level. Why Hawaiian Electric is down another 5% after hours. Target's earnings quarter and why it spent the day fading. Walmart is up next. We'll tell you what to look for tomorrow. U.S. Steel might have three bidders now. NVDA continues to roll. SMCI continues to have trouble. NXPI breaks major support. AMAT and what to look for tomorrow night. Tesla making a lower low and forming a shooting star. We'll explain why and why this can continue. We have a ton to go over. Let's get to it. Hey guys, welcome back. So we have a lot to go over. We're going to start with the S&P 500. 4420 is where we closed this 4420 here. We all know that that's a level that we need to watch, but I think we'd be remiss if we just really don't go over the fact of this 4630, how we were unable to ever get over that. We've talked about this a couple times. You can see it right here, and we can also see it right here. And I think that's a very important distinction on what's going on. So we have that top in. We talked in yesterday's video about the double top. I won't go over too much of that again. If you want, I'll just link that at the end. It'll probably be easier. But I do think you have a couple key things to go over. Number one, you are having a major breakdown here. We're starting to see it actually accelerate. Before it was orderly, see the trajectory of that? Now we're going to drill into this on an hourly in a minute, but I really want to go through this because I think this is very poignant. So if you take the bottom here and you just come up straight across, you are on a major level that you have to watch extremely closely. So if we crack here, then this is all on the table. So, and when I say this is all, what do I mean this is all? Well, first level to me is going to be this 4330. That's on the table. They could absolutely just continue to walk you down through all these other little levels as well, and you can see that. This 4375 is probably next. So these are levels that we're going to have to pay attention to. You got to watch this area tomorrow. You're going to have to watch right here. I don't want to be here now. But besides that, you already broke another level that we're going to get into in a moment. But on top of this little gem, we have this going for us as well. You have this 1222 cross right up here, and you can see that right there. I don't really like how that is shaping up at all. There is nothing redeeming about this particular section that I have in the square round, like nothing. And you can actually see the cross from here. If you drill into this, and we're going to do this on an hourly, but I just want to show you it on a daily. Looking at different time frames is extremely helpful. So you have the cross here, but note, tries to get through 22, rejection. Matumbo, again, 12, rejection. Tries to hold the 55. We went through this yesterday. Again, these videos are all linked together starting with Saturday so that you can follow along. And thank you for your comments on that you guys get that, and also for the sharing. Sharing these videos stops me from having to run ads. I greatly appreciate it, and I'm sure you guys do too. So we're sitting on this level, and here's the 55. So now we know where we are on the daily. Closing at the low of the day, there is nothing redeeming about this at all. Now let's drill into it. Now the first thing you'll remember about our chart here on the hourly is we went through this probably about 2-3 weeks ago, early August, where we said you have this head and shoulders, and you should be able to see that head and shoulders pretty clearly, but let's highlight it. So here you have, oops, let's do it this way. I'll get used to it, guys. There you have your left shoulder there, and you have your, I'll get it, I swear. Then you have your head right here, and then you have your right shoulder right here, and you can see the neckline right here. And then what they do is we gave us that little retest here, and then we just made lower highs the whole way down. Now, this is that key level that we were just talking about on the daily. And you can see on the hourly how we're stopping here. But I also think there's something important here, and we were watching this in the trading community today. If we take a look at this, you have a level here. All right. People will ask, well, why aren't you using that? Well, that rejected. I never made the higher high, so I wouldn't use that. If you want me to do a whole video on trend lines and support and resistance, comment below. I'm going to start doing more educational videos. And then you clone these, okay? It's very simple. It's rudimentary technical analysis. That's why they have a clone button. I'm using TradingView. Any charting system you have will have a clone button. It's very rudimentary stuff. So you come across here and you draw, and you can see we've broken that channel. And then once we broke that, we're retesting here. So you can get that the very first level you need to watch tomorrow and see if you can get over is 44.65. If you can't get over 44.65, you have issues. And then that just gets you back into the channel. And then you have to watch where this channel line is, right? So you just kind of extend that down and see where that sits. Eventually what will happen is the top of this channel line will drop to about 44.80, as you can see, and they just continue to walk us down. So now if we look at it from that perspective, let's say that we break here. Well, where's the next level that we would get to? You have a minor support right here at 44.14, which ties you right into where you stopped. You can't make this stuff up. All right, so now you can get rid of all this stuff up top, but let's just get rid of all this and clean it up so that you can have two levels that you need to watch tomorrow more than anything. You need to not break 44.14. If you do, you're going to here. I'll make it super simple. You can shoot all those other levels, go back, screenshot them, and set your clock to it. But you can see your neckline up here. This is your major resistance at this point, right up here. You don't even have to say 46.30. You could just use right up here and say that this is your major resistance, this 45.60, which it's been. It's just been a real issue. It's been a real sticking point. So congratulations, you're through the 55-day. You've broken and you're rolling, and they're starting to take everything down with it. And we'll talk about FOMC minutes in a moment here, and that's really one of the things that's causing this. Now, the week is not over, but I think I would be remiss in just not pointing out the obvious. This was a doji, and we broke that doji, and we made a lower low. There's very little to say about that. It is very clear what happened there, and I think that we should be paying attention to that. Now, before we drill into the Nasdaq, we can see this level right here. Broke 15,238. We all know what that level is, but we'll show you that in a moment in another chart. And you can see right here how that control bar is still in control. Here's your blow off wick where you were rejecting, and now you're pulling back. You'd like to go sideways and rebuild. Maybe that's going to happen. I think it's something we can consider as long as you don't break below here, which is going to be that 14.8, which is pretty much going to be tested tomorrow. It's kind of hard to think that you're not going to blow through that when you look at a couple things. You have this reversal up here about 3 weeks ago. We have a bearish engulfing, but if we drill into these levels, I'm not going to say it's a left shoulder head or right shoulder. It's a little too wonky, but you're right on this level. Now, before we put in any of our moving averages, if we just get super technical and use that as our major 2023 and use the wick, that's one way to do it. The other way to do it is say wicks or price rejection, which is kind of what I say, to be honest with you. It's kind of how the way I look at the world. Wicks or price rejection. Do I really care about where I put something rejected? No, because I didn't have support there. So that's one of the things I'm thinking about why I would do that educational video, because I look at the world a little bit differently. But see, when you understand what this stuff is, you can actually build your own model around it. You don't have to use somebody else's model. Some people might say that I do count that and this is why. And that's fine. It's just a question of what works for you. That is your long-term trend. Okay? My long-term trend, I would argue, is better because 1, 2, 3, 4, 5, 6, 7. This has 2. So it's very clear where the trajectory is. Now, sometimes what you could do to even take a look at that is just clone them and then just pop it up and say, does that fit anywhere? Well, look at that. It's a Christmas miracle. And you can see how it hits right here and right here and right here. And there's your channel. So if you break out of that channel, you have an issue. You're sitting right on there and you're sitting right there, 14.845. Pop these in now. Look at that. How about that? So what has happened? What's trans up here? You have a channel. You have resistance points, you have made lower lows, you have had a negative divergence on RSI, which we've been talking about for a month. We broke 50 on the RSI, which is a clear indicator of underperformance, and you're continuing to roll down. You've broken the 55, and you made a lower low today after consolidation and confirming that 5238 is resistance. What is that level? That is the 55-day. And we were talking about this about a week ago. So one of the things that we were saying a week ago was that you really need to watch this level right here and here and here. And what is this level? 15.2. That is the 55. And you can see how we've been fighting it over and over again. And then it flips to what? Resistance after it was support. So then you come here and what is it? Resistance, resistance. But we're fine because we flip. Nope, not so fast. Smash. Dreams are over. And then you try one last time, and then that is it, and then it's lower lows. We've had this pattern going on. I'll show you. We were watching this again in the room today. But you watch these trend lines, and you bounce, and then you bounced off there. So we knew that once we bounced off there, we could possibly rally back up for another test of the 55, That didn't happen, just pain happened for about a day, and then we broke down again. But you watch these trend lines and you see if you should bounce. Now, the way that this is breaking right now, when I drill that daily into a 5, I find this really interesting, and I'll just show you this. You broke on the 5 already, that daily line, and you're trying to get back through it, and you can't. Okay, now at the same point, you have this point of inflection right here, right? So I've got 2 areas that I need to watch. And they're just not, very simply, they're just not holding. So I would watch this very closely tomorrow. I would definitely watch this exact level that is marked off here and make sure that you hold that. But let's talk about the FOMC minutes and what we can learn about. Why the market sell down? Well, FOMC minutes came out. We talked about this last night. As you guys know, all these videos are connected starting from Saturday on. We talked about FOMC 2 o'clock today, and that would be the driving force. There's a couple lines here that we should really just go through that people can understand exactly why we did what we did once these were released. One of the most important things to understand is just they're talking about the data that's coming out, and then they're making decisions based upon that data, such as CPI, as you can see right here, PCE. One of the things they're talking about is that you are seeing CPI measured 12% month change in the PCE is elevated. When they're talking elevated, that means it's not where they want it to be. Elevated is a relative term. They have a very specific level in mind for us, and this is much higher than where they want to see inflation realm. Now, they admit that non-farm payroll unemployment, slowest monthly average increase since the recovery that began in mid-2020. They admit that. Now, this was something that we should just discuss. See where GDP is? We all look at GDP. They're not going to look at GDP. So GDP rose in the second quarter at a pace similar to the one posted in the first quarter. However, domestic final purchases, which include PCE, residential investment, business fixed investment, and which often provides a better signal for the underlying economic momentum than GDP does, appear to have decelerated. So things are slowing down more than GDP is showing. That's one of the things that I picked from this that was a little troubling. Now, this also shows a tightened environment, meaning the ability to borrow money. You come here and you look and it says credit availability, okay? Your ability to borrow money, a business's ability to borrow money appear to be tightening. This is what they wanted to see to slow things down, but it does affect companies' ability to make a profit. Credit from capital markets was somewhat subdued, but overall remains accessible for larger corporations. Issuance of leveraged loans remains limited, reflecting low levels of leveraged buyouts and merger and acquisition activity, as well as weak investor demand. To get rid of as well as weak investor demand and just go through this, issuances of leveraged loans remain limited, reflecting low levels of leveraged buyouts and mergers and acquisitions. People are wondering why biotech keeps dropping. This is one of the reasons why biotech keeps dropping. Banks do not want to go out there and put these LBO kind of loans on their books. They just don't want them. And they're too expensive. And that's one of the reasons why you continue to see pressure on biotechs. Here they talk about commercial loans. They're continuing to moderate, and they're going to make them a little bit tighter. The lending standards, we're all aware of that already. Now, this is interesting. Aggregate delinquency rates on pools of commercial-backed CMBSs increased in May and June. What does this mean? Delinquency rates, meaning the inability to pay on commercial mortgages, all of a sudden might become an issue, and you can see that it increased in May and June, and we'll know in July and August when we see their next statement. You can track that data, but it's much better just getting it this way. Now, this was somewhat troubling as well. PCE price inflation is expected to be 2.2%, 2.3%. Look at the date they're telling you you're going to get there, 2025. They're talking about 2025 of getting inflation to 2%. This alone tells you that they're probably looking at raising rates again, which is something that I didn't really foresee, and I think a lot of people didn't. And I think the move from Japan, as we discussed before, is adding to some of this and some of the pressure in the bond market, but we'll get to that. The additional monetary policy tightening would be necessitated by higher or more persistent inflation, represented a downside risk to the projection for real activity, meaning if inflation stays here and they have to raise rates, that this is going to cause downside risk to the activity of the market, hence lower GDP. Now, I really think this was the one driver that hurt us more than anything. You just see it all over here. Levels assessed to be consistent with the sustained achievement of committees per 2% inflation. A lot of people were hoping they'd get off this 2% level because it's going to take forever. But here it is in this paragraph. Here, 2% again, 2% again. I mean, it's all over the place. It's very clear that they're sending a message that 2% is the goal and they're not coming off of it. Now, on the banking side, and why you may have seen banking stocks weak today, this did not help. Participants also commented on risks associated with potential sharp decline in CRE valuations that could adversely affect some banks or other financial institutions, such as insurance companies that are heavily exposed to CRE. That's kind of interesting they're bringing up insurance companies. And here we go again, 2%, 2%, committed to 2%. I mean, it's over and over, all over the place. You can't miss it. And just to end, if you look at the vote, it was unanimous, meaning nobody went against this. No one thought any differently. And then you can kind of see from here where they're all at. I mean, it's very clear, unanimously approved, 25 basis points. I mean, nobody was on the other side of this, not one person. Next meeting is September 19th to 20th. Now, this is the 10-year yield, and I think this is very important. We rallied all the way up at 2 o'clock, and you can just see that move from 2 o'clock on, came back, tried to see some buying, and now we're at 4.25. We're actually over that 4.25 level. If we take a look at the 10-year yield, you're breaking out. Meaning, why are we breaking out? Because they're selling bonds. Because if you read that, as we just went over, it is very clear that they are probably not done raising rates. And by those statements, you can see what they could possibly do to the economy. That means that this is something that we really need to watch, and we're going to start watching the 10-year again. And it makes a lot of sense now on why the 20-year has been plummeting and why they are selling the 20-year. I don't know how much longer this goes on for. I do know that there are some concerns here, and it does look like they're just very, very clearly not done doing what they need to do. And that is a problem. It's definitely a problem for the bond market. So we need to keep that in mind. But let's talk about how it affected stocks so that we can benefit from this. So first and foremost, Apple. That is a bear flag, and you were unable to lift at all over any of those levels. And I just want to point this out so that everybody understands where we are. There is a level down there at 175 that we need to watch, but you have this level right up here that you've been battling ever since you came out and missed iPhone sales for the first time in years. And you can see very clearly that we closed at the low of the day. Why is that important? Because this whole sell-off was very muted until the last hour. And we know that it's institutions that sell at the last hour. So we know that that's an issue. And we know that's something we have to pay attention to. So now I've got this shooting down hammer. Now, for intensive purposes, I want to go through these names in regards to it in alphabetical order. I just think it's going to be easier. You need to watch this tomorrow. You crack here, you gap fill. If you get through 175, the floodgates could open here a little bit. And I think that's where you're heading, quite frankly. Despite all the other charts we went through before we go into the alphabetical order, it's very difficult to look at XLK, which has Apple and Microsoft in it, look at that and say we're going higher. It's almost impossible to look at that and say that we're going higher at this point. Right? It's very clearly showing that you're not. You're seeing no support and you're breaking lower lows. After hours, we're actually seeing some dumping of mega cap. One of the names that we went over this week on Saturday as well was this FNGD. And you can see very clearly here how you are closing above what? The 55 for the first time. And I think that's very important to note. And I do think that's something you might want to pay attention to, and you might want to see how this whole thing goes. I would not be in a hurry to sit here and try to figure out how to pick off the bottom. I don't think you're there yet. I'm not saying that we're going to go to fall out of bed, but you need to look at this and what it's telling you. Now, what do I mean by that? I'm going off on a little bit of tangent here, but this is going to come all together in a moment here. See where you're at here in January? You have not been above that 55 since today. A full close above that 55. It's today. And that's very important. The day I thought it was going to happen, I'm going to open it up. I'm going to keep this on a daily for a reason because I want you to see this. See, I thought that was it. Then they gave me the reversal, which was just the shakeout. And then boom, that's it. Off we go. Very little to say here. You're seeing this everywhere, and I'm going to tie it into these as well, because one of the things I want you to take from this video tonight, you're going to be trading options. The implied volatility is going to kill you. The implied volatility is eating into your profits, and you don't know why. It's because the VIX's been so depressed for so long that any kind of movement is causing that. So if I watch this level right here, this 38.25, I would be real careful here with ARK right now. To me, this is setting up to break out and start pushing again. We've been buying these bear funds for some time in the community, and we're doing quite well with them. I see no reason to move them, but let's get into some of these names that are going to come out with earnings. So AMAT, I just want to be real clear about this. I have a short position in AMAT. I like AMAT, but I was very clear yesterday about this level right up here. I was very clear that you have this island reversal that's floating right in here. You should be able to see that. You have these gaps in the chart. We went over that. Here's your 22 breaking down. Here's your 12 pointing down. And here's the 55. Now look at this move. Breaks, tries to get over, convinces you don't have to worry about anything. This is like a little bit of a bar and saying, oh, well, maybe it'll go back over. This is actually called a bearish harami. And you crack here, and now you close at the low of the day. Why are we closing at the low of the day? We went over this. It has to do with what we're seeing happen. The other thing you have to start looking at are names out there that are coming out with earnings. These big names that we're all trying to watch and see what they do, like Wolfspeed. We're watching these names come out with earnings at 53, and they come down, they lower guidance. Right? This is not, this was a high flyer, and now they're doubling their loss. You want to watch this stuff. The big thing you need to watch tomorrow for earnings is not the estimate, it's not the revenue estimate, it's not the earnings estimate. You must watch with how they explain bookings. You need to listen to their bookings and backlog. That's going to be huge. Bookings and backlog and how they talk about it. The real stuff is going to come on the conference call. The real move on this is going to be the conference call. Because if they're not building this huge backlog to meet demand, then you're going to see NVIDIA have a real problem. It's going to be an issue, and it's definitely something you have to pay attention to. I'm not saying that there's not trades out there. We had guys that were trading DLO today, and they did very well on the long side. It's not my kind of trade. He gapped up. You're up $1. It looks great, but I don't fight the tape the way that I trade if you guys haven't picked up, and you should trade how you trade. You should trade what works for you. The way, and I'll go through a couple here that worked. I think a lot of things actually worked today. I'm trying to think if I had one that didn't work well today. I'll have to take a look. Oh, I have one. So if I look at this, I don't want to fight the tape. The tape right now, when we start breaking the ES, what do I mean by that? I'm teetering right here. I have this above me. I'm teetering here. I'm fighting the tape. Okay, I'm below the 55 already. I have a 1222 cross. You go long here, you're fighting the tape. I'm not saying it can't work, but you start looking at even the defensive names. And we talked about this the other day. XLE looked great. Let me clean all this off. I'll leave it. So if you're interested in getting some of these details, I do go over them in the free newsletter, link in description. But if you see this right here, this DTL, which is drawn absolutely horribly. Right now, let me just connect that back and move that right there. You can see how you got to the top of that DTL and you're rolling. Well, I'm long some energy names. Well, that doesn't make me feel warm and fuzzy. So even the defensive names are coming in. Why? We're cracking. It's that simple. They just get out of equities. We talked about this 2 weeks ago that they were even selling healthcare, and then we thought it might have stopped. It did not stop. So this is the stuff we have to watch. You have to watch this with AMAT tomorrow. If AMAT cracks, this can get really ugly. I mean, 133 is nothing. This can get really, really ugly. Like last quarter was excellent. So you're going to want to see that. You're hoping that they didn't already front load with inventories. So, but you could see 133. If you really cracked, you'd get to 125 fast. So you're going to have to watch this. You're going to have to see how this plays out and go from there. But you are seeing some movements. HE was one I want to go over again. This is one that we went over yesterday. We also talked about this in the pre-market video yesterday. We got in this as a short, and the pre-market live is a public video. I don't have all the greatest ideas in the world. The idea that we all share in there in the morning, I usually started at 8:30. I try to start around 8:15, but it's been around 8:30. So if you look at that break right there, once we did that break, we shorted it in the room and we bought puts. We were up 100% in the day in the puts. We carried them overnight and we just crushed it on the short. What should concern you is their lawsuit for what's going on in Maui. I've watched this play out with PCG. I'm not going to walk through it all again, but it's already starting. So electronic shares are trading lower following reports suggesting the company is facing multiple lawsuits alleging negligence over the Maui fires and is in talks with financial firms for restructuring. One of the things they came out and said today Wall Street Journal, Hawaiian Electric faces multiple lawsuits alleging negligence over Maui fires. Hawaiian Electric to explore options to address financial and legal challenges. I'm going to save everybody a lot of time. See this language? Financial and legal challenges. Financial challenges. We're going to need money. Where's that money going to come from? Same place it came with PCG. They're going to cut their dividend. That's their next move. If a company's ever in trouble, they cut the dividend. Have the cash flow come in, they can meet their needs. Legal challenges, bankruptcy, mergers, selling of assets, okay, protection of assets. That's what they do. So expect huge volatilities, we said. I have a short position, I have puts. The problem with something like this is it could just be halted in one of those things that doesn't open. But if it does what PCG did, it's going to open and close, and this goes on for years. It doesn't go on for just days or weeks. Now, what do you do with this? You have a doji right here, so you're just going to want to watch the doji on the news. I'm surprised it didn't go lower. I actually bought the 10s as soon as that news hit and did quite well with them. I went up to September. But I would watch those two levels now. I'd watch 1346 and 1761. Dojis are uncertainty. You want to see what happens. Someone could come out and defend it. I think they'd be crazy, but you could see that happening. NVIDIA, you're going to really want to watch this. I'm very surprised that we didn't fall down more today. And why is that? Because once we cracked here, we had a perfect evening start. I expected this to give back. It really didn't give back as much as I thought it would. I'm just going to be candid. It's a little confusing to me. The close was 437. Right here, your close was right around that 439. You closed below both of it, and then you just stopped. So you still have people here defending the name. Yeah, you have Rosenblatt, and I think this is somewhat interesting. They have an $800 target price on it, because why not? Up from 600, and the stock's down. So that shows you where people's heads are with this. AMAT is going to affect NVIDIA greatly tomorrow, and I would keep that in mind. But you're seeing these other names crack. We went over NXPI on Saturday, and I said, watch this. If it starts to crack, it'll be the next one. We said the 55. You can see how all these videos are connected, I hope. So then you broke the 55, and then you got your confirm move, and then you went through your support level that I have right here that should actually be here. I don't know why my lines are moving. And you want to watch that because that's really your support level right there, but you can see where the RSI is. So you're going to want to watch these levels. This is stuff that you have to pay attention to. I do want to follow up on this because I get asked to follow up on things a lot with your comments. I do read your comments and try to answer all of them. But you see what's going on right here? And I'm trying to cut these videos down during the weekday so that you can process all this. I know it's a lot. But you see this right here? This is stocks above the 200-day moving average on a percentage basis that are in the S&P. If you are below this 50 line, you underperform. If you are above this 50 line, you outperform. You can go and mark this off yourself and go and mark it on any S&P chart, and you will see that I actually know what I'm talking about. Right now, you're at 52.88. You are down another 4% today. You do not want to break this 50 line. This is the symbol, TH. This is TradingView. And you can do this yourself, and you don't even have to have an account with them. They're pretty cool like that. You can do it for free. I just want to keep going through the high flyers so that you get it. It's not one name that's breaking down. It's all the names, right? And you're seeing it. Here's another example of a bearish harami. You broke, you took out the doji, and you just weakness, just straight utter weakness, and you're seeing that. Now, I did want to go through a trade that did not work, and then I will show you how we made it work, quite frankly. So I went into this. I had the 120s. You can listen to it last night. It's recorded. It's yesterday's video. I rolled the 130s that I did well with, and I was short stock. I covered the short, rolled the 130s and the 120s. The 120s this morning are basically wallpaper, meaning they're worthless. So come in, read the quarter. Everyone's looking at this quarter. They have no pricing power whatsoever, so they lose on revenues. They're telling you that their clients are coming in less and less, and they're declining store. Sales are declining, and they're getting less foot traffic. The reason that they beat is because of cost cutting and tightening their belt. That's why they beat. And then they lowered guidance. So all you did was gap up. Why? Because you had huge short position. You had a huge short position on, and then I did this morning actually in the trading community on the live public call. I was explaining this. So one of the tricks, and we go through this trick all the time, is you drop an anchored VWAP on the first move of the first bar, and it works, and it works pretty darn well. And this told us everything that we needed to know. You could see how we started selling down and we're unable. Off the rip, they open us up. We're unable to hold it. You rally back up, and that was all she wrote. And we put a short on, we put a short on and we bought puts. Why did this work? Because we had it all mapped out. We knew exactly where our level was, and we didn't care that we lost money on the other portion of the trade. It was already paid for with profits, but we did start with a loss on it and then came in. We had a gain the day before that paid for that loss, but then we came in and just reloaded and put the trade back on, and you can see how the trade did. It did exceptionally well. I would tell you that I would watch Walmart very closely tomorrow. You could be doing the same exact thing with Walmart. Now, I expect Walmart to be the beast and win. Like, they should be the 800-pound gorilla. My concern with stating that, let me just grab this and so you can see it. I'll just put this level right here. My concern with that is that we're just having some trouble now. And I'm not sure why we're having this trouble up here, but we are. So that's definitely something I'd want to watch for tomorrow and go from there. You are seeing some of these names like Tesla continue to drop. Okay, I'm going to be clear about him cutting prices in China. He's not a marketing genius, even though he's 100 times smarter than I am. China is deflationary. That is why XPEV is plummeting like a stone. That's why all those names are plummeting. They're having a real problem over there, and you can see that. Tesla is cutting prices because they're not able to move cars. Pricing power, it's an issue, and we're seeing that issue here. So keep that in mind. That's why this is doing what it's doing. It is showing zero signs. We went through this morning on the public call, and I must have been talking about this to the point ad nauseum for the past 2 weeks. Okay? If you don't want to short, you don't want to buy puts, TSLS. Take a look at it. Okay? We've been talking about UPST, and I just want to point out these patterns. You're trying to rally, you fail to rally, they lure you in with hopes and dreams and promises, they gap you over, and then what do they do after they gap you over? They gap you down. This is called a downward Suzuki. Right here, when this happens, this flip right here, it's very bearish. This is a gravestone. I've got two bearish patterns sitting right here. I crack that low tomorrow. I may take out the lows. I'm short and I have puts. I'm flat on the short and I'm down in the puts. I like to comment when I'm down on things as well, so people don't think everything that somebody does is a winner. Guys, bottom line is if you're batting 50%, you're crushing it. It just comes down to money management. I mean, the top traders in the world are like 55, 60, some are 60%, some. But if you take a look at this, look at how we're trying to break out here. Look at X. I've got 3 battles going on right now for this company. I've got a private offer at $35. I have no idea why it's just trading at this level. The only thing I can think about is antitrust issues. But I'm trading at this level. I've got a $35 offer. I have a merger with CLF, which is actually lower than the 35, but the 35 I have for cash. And now Alcator just came out and said, we're putting together a bid and we're going to get in there. I've got 3 corporations in a bidding war, and for some reason, this is not trading closer to that cash valuation. That's it.